Good morning. We are live. What's up, guys? How you doing? We got CPI this morning. Came in close to expectations. Came in, here, I'll give you the numbers. US CPI year over year, forecast was 2.5, came in at 2.4. Month over month, forecast 0.1, came in at minus 0.1. Now, the core number, the year over year forecast was 3%, came in at 2.8. And core month over month, forecast was 0.3, came in at 0.1. So that hit close to an hour ago now. So most of that volatility, we might see some institutional orders triggering at the open based on that, but by 8:45 Central, that volatility should pretty much be tamed and the market should be looking forward. Now, tomorrow, this is a crazy couple of days as far as news. Tomorrow at same time, 7:30 a.m. Central, we get PPI. Okay, so keep an eye out for that. Now, as far as speakers today, there's quite a bit going on. I mean, a lot of Fed speakers, which, by the way, today in 2025, unless they mention tariffs, won't do a whole hell of a lot, but they could mention tariffs, so we'll see. There is a closed press cabinet meeting for Trump at 10, and then Trump will be at the swearing-in ceremony, 11:30. A few more Fed speakers, and Trump will be at a bill signing at 3 o'clock. So we'll see if we get some random tariff headlines today. I expect maybe we'll get a few. How about yesterday? Oh my goodness, yesterday was a crazy day. Yesterday was insane. So I guess Trump saw the rumor, what it did to the market, right? That fake headline, how it pumped the market like, what was it? Like 1,100 points in less than 10 minutes. And he made it real. So they are now doing that. He raised the tariff on China to 125%. This came out yesterday, pumped the market to oblivion. 90-day pause on tariffs for non-retaliating countries. So market went nuts. Fading a little bit here this morning, down 2%, if you look here. But volatility's good. We're seeing about a 30 average true range here in pre-market, which is good. So let's move forward. Keep it going. Took a few trades afternoon yesterday. I got off stream minus 2R, if you guys remember. And I finished the day yesterday still in the red, but I was down 1R yesterday. So the 12-day winning streak is now bust. That's fine. Don't get attached to winning streaks. Ideally, I know it's harder, but don't let losing streaks get in your head too much. But the winning streak thing is kind of just for fun. Don't let it go to your head. You're never going to have like a 300-day winning streak. So, I mean, really, what's the end game there? Good morning, guys. How you all doing? Peter, good morning. John, how you doing? Christopher, what's up? Hey, Ron. Blew my second PA ever, taking the month off. Hang in there. It's kind of early to start taking the month off, I think. I mean, what, you're going to take three weeks off? I don't know. Seems like a long time. Just get back on the horse, learn your lesson, move forward. Jet, how you doing? Exposed, what's up? Jude, good morning. Scrumptious, good morning. Chris. All is well, brother. Thank you. All right, here we are. 2 minutes out from the opening bell. Let's see what we can put together here today. Ron, just too expensive, down 220 this month. I hear you. Doesn't compare to funding a personal account and then blowing that, though, to be fair. Rufio, got denied a payout with Apex. Sorry to hear that, but that's on me. I went above the 30% rule. Yeah, before you request a payout with Apex, just make sure all your ducks are in a row. Make sure you didn't break any of their rules. And if you didn't, you shouldn't have any issues. Most of the time when people get denied, they clearly and blatantly broke a rule, and it's most of the time on them. All right, 40 seconds out. Jason says, Nico, why don't you let your winners ride? I think that's kind of a fallacy, don't you? The futures market, in the last few days here, the futures market, yeah, you should let your winners ride, baby, because it goes 2,000 points. But on a typical day, there's a mean, and you get deviations from the mean all day. Now, I'm trading continuation, so I'm buying high, for example, oftentimes, not always, for example, and looking to sell higher. So I'm deviating even further from the mean. But the further you get in terms of and this goes for any time frame, there's the opening bell. The further you pull away from the ATR, the more you tempt that rubber band snapback. The further you pull away from, I don't have it on my chart, but let's say something like the volume weighted average price, which is just data based on what the trader's been doing. The more you tempt the sellers to start selling short for a snapback. Now, you can let your winners ride, but Jason, here's the reality of that data. If you're looking for 5-to-1 reward to risk, guess what? Probability is going to be much lower. So there's a lot of different ways to trade. You can go negative reward to risk, have a 90% win rate, or you can go very high reward to risk, like Jason says, letting your winners ride, going for 5-to-1, 10-to-1 reward to risk. But you are not going to have a 60% win rate, at least if you're taking any more than 2 trades a year. As the edge goes way up, opportunities go way down. So I prefer to take a little bit of edge as often as I can. Some people will take 2 trades a year with a lot of edge, and they'll just sit and wait for those opportunities. But that's not me. That's not how I want to trade. No, we are trading the Nasdaq. Okay, so we are getting a push downside here off the open, letting these institutional orders clear. Again, these are usually going to be a week out, 3 weeks out, 3 months out mentalities. It's hard to find edge off the open. Most of these orders aren't basing off of what's actually going on the time frame that we're looking at. Yeah, Zachary, we'll see. 40 points. You know, in hindsight, I was kind of reviewing my trades last night. In hindsight, 40 points, might have been a little tight for me yesterday. I probably would have performed slightly better had I widened that out to a little bit lower volume with 60. However, I thought about that. But in a few of my Apex accounts, I'm only trading a single micro. So I was like, well, how would I navigate that? So I stuck with 40. But we'll see what the ATR ends up being here midday. If that range, that average true range, ends up popping above 80, 90, 100. I have to think about why now. But we'll see what it ends up being. Yeah, Jason, listen, you can trade that way. That's fine. I just find that with probability-wise, 5 points on the Nasdaq happens like that. So it's a very high probability that that 5-point trailing stop is going to get hit, and now you're giving away 5 points on your trailing drawdown extremely consistently. For the off chance that maybe you catch a news headline that pushes you really high really quick. But if you look at the data in hindsight, I think it's going to look similar to just taking your winners. Now, trailing stop strategies can work differently. I'm not going to say necessarily better. They'll work differently if you're giving it more room. However, then you're dealing with going, 25 points in the money. You have a 20-point trailing stop, and now you come back and you get a 5-point winner. That can be a problem for trailing drawdown in prop, especially. But even with personal accounts. You'll go through streaks where you'd perform much better just taking it off at 25 points rather than trying to trail it. More range-bound streaks, right? Now, knowing that the market is more often than not going to be range-bound, I prefer to just take my winners. That doesn't mean I'll never trail it out. It's just right now, that's not what I'm doing. Hey, Sean. Yep, Cameron live every day, 8:15 a.m. Central. Yeah, you know, Eric and all you guys, that's not to say that Jason's wrong. It's just a different way to trade, and I'm just explaining how I look at things, how I think about the futures market. I think about the futures market as extremely efficient, with sometimes you get deviations from that efficient mean. When the deviations are strong, like continuation, whether it's away from the mean or back toward the mean, I'll trade that. Or if we tighten down into a channel, then I'll trade the outskirts. A lot of ways to make this work, guys. There's no right way to make it work. The only wrong way is if you have no edge, if you have a negative expected value. Then it's wrong. But listen, if you show me the weirdest way to trade imaginable, but you show me data and it says, look, I know no one does this, I know this is bizarre, but look, I have edge, then you're better than 98% of people. All right, we'll see how this market develops here in the next couple of 2-minute bars. Listen, if you guys could, really quick, press like on the stream. It does. It helps out tremendously. I appreciate you doing that. Coming in here to the 20 EMA on really the 2-minute, but also the 5-minute as well. We're kind of sticking to that right now. You see this flat bottom that's forming? Here, the 5-minute shows it really well. Kind of like 18,750. These flat bottoms tend to tempt break. Here's the test. Well, if we look at Thinkorswim here, you can see maybe a few stops. However, we kind of already took those out back here. So this is a really, really wide range as far as stop hunting. Because, you know, if we look at this, like, well, where would everyone place their stops? Well, you're going to get some in this region, some now below that wick, some below this wick. Though the overnight session is going to offer less opportunity for stop hunting just because there's less stops placed based on overnight levels. But once you get into the morning, people will go back and set stops based on overnight levels, but it's just not as often as levels that get set after the bell. Headline just now from Trump: inflation is down. Just commenting on the CPI data. You know, right now, really, I hate to say it based on what we saw in like 2022, 2023. Is inflation really the story at this point? The story is obviously tariffs. So I'm really keeping an eye out here for highlighted tariff headlines. All right, here we are into 840 territory. So time to start looking for any setups if the market develops here. Still that flat bottom I'm watching. We could see the very early stages here, by the way. We draw kind of a rough price level there. This is aggressive, but I'm kind of paying attention to that. This here was just before the bell. So that carries a little bit less weight, but we'll see if that ends up coming into play at all. Another test here, the flat bottom. This was the attempted break. Eric, did anyone catch that massive move yesterday? I was away from my computer. Hey, that's okay. Don't give in to FOMO. Not gonna catch every move. I traded a little bit before that move, and I think maybe one or two after that volatility died down. I can't remember. But during the move was very, very tough to trade. I was kind of sitting here watching, and everything widened out, and we were seeing 100-point moves that looked like chop. And I was like, well, you know, for prop, you could argue that even one micro for like a typical 50K Apex account was like too big during that move yesterday. So during the actual move, I kind of held off, took my time, but clawed back a little bit in the afternoon yesterday. Well, there's the break of the flat bottom. Yeah, I saw quite a few brokers were raising their margin requirements, which, I mean, makes sense. I guess they have to protect themselves. All right, there's the downside break to that flat bottom, what we just talked about, right? Those flat bottoms, they tempt breakout. So we are now coming into that wick that we saw pre-market. Maybe took out a few stops. Again, maybe a 10-point move below there, which is pretty typical for a pre-market level. So now we see if we can get a continuation sequence here to the downside. ATR is up about 70. So it's reasonably high. You know, it's not 120, but volatility's up there. So again, if you need to, if you're trading 10-point stops, maybe think about widening that out and lowering your volume to get that same dollar amount risk, right? With wider brackets. Well, Quicksilver's back, so if we see this market fall, you know, 4 or 5% today, he'll probably catch the whole damn move. Bull's attempting to see here. Look. Bull's attempting a reversal sequence. You see that bigger bear bar and then that big wicky bear bar with a smaller body getting wicked up from the bottom. That's the bulls trying to step in and get a reversal sequence going. We'll see if they can. If they do, then we're looking at a descending channel with limit order scalp mentality. If they can't hold it and we continue downside, then 100% I'm looking for continuation. What's up, Scooby? Welcome back. So you hear the bulls trying. Sellers stepping in, not making it easy for them. All right, now you see here, we'll see if we get this descending channel forming, which I would be a fan of. Now, heads up, by the way, in these volatile markets, reversion scalping it gets a little bit tougher because, I mean, your entry point, like let's say this region here turned into an entry up here. Get that 20 lining up, let's say down the line. You're going counter very short-term trend, right? The last two minute bars is an uptrend, okay? Very, very zoomed in, very short-term. You're going counter trend, betting against the move. So what you do is you enter and then you need the bulls to put the brakes on, the sellers to step in, reverse it before you get stopped, and then get that momentum going back downside toward the bottom of the wedge or the bottom of the channel. The more volatile the market, the higher the ATR, the more right you have to be. Right, because if I enter here and we see like a 40-point overextension, boom, that's it. Right now, that would be a pretty clear break of this trend line in this market. But if someone were to enter a little early, all you need is a kind of a small overextension and they're out, especially if someone's trading with like 15-point stops. You really have to be close and time the brakes getting put on very well. So in a volatile market, I would not encourage anybody to try to reversion scalp with tight stops. It's just too hard. If you want to trade tight stops in a volatile market, fine. But I really think it should probably be done on continuation. Though I keep mine pretty similar for both in a market like this. Oh, Lee, no train today? You gotta work? Probably fire off a few at the office. Bad influence. All right, well, there's the test. Now you see these tests, if these break, you can see pushes through rollovers, an additional move upside, and then boom, continuation to stop hunt these shorts. Because what do shorts have? They have a whole hell of a lot of buy orders right up here. We are respecting a little bit. You look at the 5-minute chart, top left. Well, here. You can see that 20 EMA, it's kind of hard to see, but you can see the 20 EMA is lining up with that trend line on the 5-minute. And we're attempting to break here on the 2 of the 20 EMA, right? Heading into that trend line. So we'll see what we end up getting here. Again, I don't really care whatever way it ends up going. What I'm going to do actually is delete this. I like to keep my charts clean. And we'll just roll with that for now. And if we get, right, pull back, all of a sudden now it's like, okay, well, I can start trading that trend line. Reversion scalps, limit orders. But honestly, in a volatile market like this, I'd prefer a continuation sequence, which would mean a push through would be necessary here. But I don't care which way we do it. Marshall says, Nico, do you trade the same way in pre-market as the regular session? Yeah, more or less. Though in pre-market, if I am going to trade pre-market, I'm not a huge fan, by the way, of like Asia session. That's night time before we get into like the earlier morning hours. I just get chopped to hell in Asia session. I don't know what it is. I think everyone kind of does. If you're somebody who makes a ton of money in Asia session, let me know. And I'd like to know what you're doing. But it's so choppy. Volume is so low. It's just so hard to get a read on anything. And it's a great way to get chopped up and die. Death by 1,000 paper cuts. But like pre-market volume starts to come in, things get a little bit better. I definitely lean more toward reversion scalping than I do continuation pre-market, obviously, because you're not going to get quite as much volatility on average. But yeah, more or less. When you see me reversion scalping, when the market is open, like on stream, if I'm going to trade futures pre-market, that would pretty much be how. Steam, Nico, you're not doing the negative RR scalps anymore? Only 1-1s now? That's not true. I just adjust based on the market. What you've seen a lot lately is a lot of 1-to-1s. If the market is more range bound, meaning less wind at your back, I'm not against going like 1-to-2, even 1-to-3. I think yesterday in the afternoon when volatility died down, I took a couple trades that ended up being like maybe 0.7-to-1 reward to risk, which helped me claw back a little. All right, we're still testing here the 20 EMA on both the 5 and the 2 and that trend line all at the same time. Market can't make a decision here, so gotta make it decide here. Are we gonna go higher or are we gonna start rejecting off that line for me to be able to take something? But to add on to the reward to risk question, the way that I trade, a pretty simple rule of thumb is the more volatility, the more of an ask I'll make out of the market compared to my risk. The less volatility, the higher probability I would argue that a negative reward to risk strategy is going to have, because you get a lot more reversion to the mean, a lot less sizable deviations from that mean. So with more volatility, I can expect consistently more deviation from the mean, so I make a bigger ask and go more like 1-to-1. Which, by the way, is not the only way to trade. That's just, to me, when I think about the futures market, how it operates and how it tends to trade, that's what makes sense in my brain. There's a million ways to make these numbers work. You don't have to trade like me. Well, I think we'll go ahead and get rid of this. We can see the flat top there. Again, I want to keep these clean. That flat top's pretty obvious, down around like 18.3. So we broke that out, obviously, yesterday. All right, here we are, getting a nice rejection off of that descending resistance now level, which it is acting as. And what we may see, here, let me pull this up. What we may see, which is actually kind of nice. This is how I would draw it. Again, I prefer, I know some of you are like, well, what about that wick? I prefer to have an overextension or two, just in favor of drawing it how I think most people would see it. Like the way I think about trend lines, don't overcomplicate it. Think about, okay, if I went and asked 1,000 people on the street, who maybe half of them are traders and the other half isn't. And I said, hey, like, you know what a trend line is, right? And I explain it to them. But I don't tell them how to draw it. And I say, okay, look at this move and draw a resistance trend line, assuming they would know what that is after I explain it. I would think the majority would draw it like this. I don't think, and you know, they understand touch points and everything. I don't think most people would draw it like that. Because they would be like, well, you need 3 touch points, so I would draw it probably like this because you get 4. Right? I mean, that's how I prefer to draw these things. Don't overthink it. The more you overthink a trend line, I think the less weight it actually carries. The reason it even matters is because a lot of people are watching it. And by the way, a whole lot of trading algorithms are programmed to see patterns that they think humans are going to see. That's what they're looking for. Self-fulfilling prophecies. That's all this really is. All right, continuing that bit of a rejection here. You know, I gotta tell you, that wick bottom, I don't like to see candles like that. That wick bottom has me interested. The previous wick bottom, right? A few candles ago. Because I know there's stops. We maybe could do some stop hunting if we get a good sequence setting up here, but the bulls are wicking this back upside. I don't like when we see those big chop candles where all of a sudden you get like a split-second big move down. It's like, okay, some algorithm somewhere is doing something with big size. I'm interested in this wick here. A nice bear sequence coming into this wick. I would put that on, betting on that new like early flat bottom break with some stops to push me quickly into the money and maybe get some momentum going downside for, you know, a quick maybe 10 points, pushing me to a 30, 40 point target. Nico, a video idea helping people understand sell limit orders. I see a lot of questions on forums. This bar closes here in a minute 50. I gotta keep an eye on that bar. From people trying to understand using stop limit orders at the top of channels. Are you talking about for, because a sell limit order, when I think of a sell limit order would be in exit order. A stop limit order, like a stop limit sell or a stop limit buy, to me would be an entry order. Oh, at the top of channels ranges. So you're talking as an entry bar. You let it sit. Okay, watching this for a minute 20 out. I would I would sell the rollover if we get a nice close. The range on this bar is 56. So we're a minute 15 out. Yeah, so you're talking putting a sell limit out to catch the top of a range. Lee, the reason I don't do that is because I don't like having an entry order like that for reversion out, because sometimes, and this happens kind of often, what you'll see is a test of a channel And then all of a sudden a news headline hits and it jumps 100 points and it just rips through the channel. And now you're in going against that move. Not to say that it's so irresponsible to do if you have automated stops. That's just why I don't do that, because I don't want to get caught on that. I want to have control on my entry on reversions. Now with continuation, sure, I'll use like a stop limit sell or a stop limit buy to enter. All right, we're 20 seconds out here. Here's the 2-minute look. See if we can... Oh, we're wicking back. Oh, come on, sellers, push us down. There we go. Hang on, I just had a massive glitch. All right, hold up. Big old glitch. I got like partial fills across the board. I gotta take care of this. Holy shit, hang on. Okay. I'm flat. That was ugly. That was very ugly. So I'm green. That was an algorithm move. That was ugly. Okay, so I gotta make sure I'm flat here. I think we're good. I have no orders out. After it was all said and done, I made 265 bucks, which is like 0.1 R. Okay, we'll call that a scratch. And we will look for better setups here. Now, these next couple bars I gotta let work out. I mean, here, if you look, my leader account, I guess, got stopped extremely quickly. I got like 15 errors that I had to quickly clear. And then the rest of my accounts I was able to flatten. And that's how we sit. This is why having automated orders, I was protected, by the way, on all of those entries. I got partial fills across the board, which is why this is like, you know, on that trade I was risking 1,500 to make about 1,500. But I was protected on all of those. You can see the leader got stopped. The rest of them somehow remained in the trade, never hit their stops. And then I got a little bit of continuation, but that did not work well. So we'll see what we can do here moving forward. I gotta let these bars work themselves out. You guys got glitches too, right? A lot of you guys were saying you got a glitch. Again, that's why having automated stops, because luckily, worst case scenario, I was still protected. Okay, worst case scenario there, I would have lost 1,500 across all the accounts. If that happens and you don't have an automated stop, shit could go really bad really quickly. So we'll basically call ourselves flat here on the day. That could have been ugly. Well, I guess it could have been a 1R loser, worst case scenario. Okay, so the range on these bars, that last bar, 126. Sorry, I'm making sure everything's right here. All right, again, listen, just a lesson in having automated risk management. Could you imagine if I had entered, if any of us had entered that trade with no automated stop, and that glitch jumps 300 points? Or maybe a news headline hits and it jumps 200, 300, 400 points before you even know what's going on. So everything possible, I think, should be offloaded to the computer. So we're getting a Fed member speaking, committee member. Mostly as far as headlines, we're getting inflation stuff. Just a few seconds ago, I intend to remain focused on inflation. Do not take much from the theory that tariffs may only have a temporary effect on inflation. So we're getting a few mentions here of tariffs, but that's about it. All right, so we are, again, we're sitting pretty much flat as we sit right now. A little in the green, but I'd call that flat. And just waiting for the market to calm down. Did you say Bollinger Bands is another form of standard deviation? Yeah. I wouldn't trade off of them on their own. I would look for patterns surrounding them as an idea. But yeah, 100%. I would see it's another form. I would see it as another form of standard deviation. All right, Bull's trying to put in a reversal sequence here. I mean, you guys see what I'm looking at though, right? This is a very clear potential aggressive, but potential descending channel here. I would probably draw it like that. Right, don't overthink it. Rufio, unfortunately, TradeEvade doesn't have bracket orders when using their copy trader. Really, I put my limit stop immediately after taking the trade. Got burned too many times before. Hey, Rufio, I don't know if you're actually using a stop limit order to manage your risk, but quick tip. When you're using a stop order to manage your risk, which a lot of people don't understand when I say that, you can also use a stop order to enter, right? Which is, I use stop limit orders to enter trades. If you're using a stop to manage risk, unless you're intending to use a stop limit on purpose, you should probably think about using a stop market order, because what can happen on a stop limit is if you don't get a limit fill, it doesn't stop you out. And you could have a 300-point move that happens in 2 seconds or 5 seconds, 10 seconds on a news headline that was random, that you didn't see coming, that skips over your stop limit set at 30 points or whatever, and you don't get filled. That's a scary situation. Stop market orders, if they hit, they just fill you at market. Yeah, you might take some slippage, but cost of doing business to protect yourself from those black swan headlines. You know, I love this volatility. I really do. And I don't mean to complain, because we were begging for this 2 weeks ago and we got more than we bargained for. But these big algo like headline jumps and dumps are kind of causing some problems across the board here, aren't they? When you get a random bar, I mean, you get an ATR of like 75, which is where we currently sit, and then you randomly get a bar that jumps like 180 points. Cause a few problems here or there, but I'm not going to complain about it. I'd rather have this than an 8-point ATR. Sitting in a little bit of a red green range right now. PC, good morning. I have a question about Take Profit Trader. I passed yesterday, but today is day 5. Do I need to trade, or can I just leave it alone for the day? Or can I flip one MNQ and call it a day if I do need to trade? You have to lock up a trade on all 5 days. So if you're already like ready to go, you could just trade small, trade like one MNQ, just to show trades or a trade for the day. Yeah. Yeah, Zachary, so it would depend. Are you using market orders on the follower accounts, or are you using limit orders? That would be a big difference. If your follower accounts didn't fill at all and you were using limit orders, that would be why. Now, I mean on the followers, not on the leader. Because on the followers, you can do market orders or limits. All right, seeing if this descending channel continues to develop here. But you can obviously see that right there is what we're looking at. Yeah, so the new copier, I like it. I think it's probably my favorite that I've used. I mean, flat bottom, you know, this would only really be the second touch point, but yes, I am looking at that as a potential flat bottom and see if we can break downside through, but ultimately more so what I'm looking at is that descending trend line. Yeah, Eric, to answer your question, I think this is my favorite copier so far. It has the most risk management features, which I'm obviously big on. Okay, there's the test. Let's see if we look here. There's the test. We'll extend that trend line a little bit. See if this holds up. Yes, Zachary, that's what the button is for. Because think about it, if you're using a limit order on your leader, then, and you don't have that button checked, then all your followers are going to try to fill with limit orders. And a lot of times, especially if you're using like the more accounts you get, a few of your accounts aren't going to fill with the limit. And that causes problems. So yeah, you deal with more slippage with market orders, but that becomes more and more important to use the more accounts you start adding, just to streamline things. No, Scooby, so I was using Replicanto. I like Replicanto still, by the way. It's just, now I'm using this one. This happens to be affordable indicators. I don't know, I like it. This was a recommendation from you guys, actually. So I went ahead, set it up. It has a lot of features. It has everything that Replicanto has. It seems to perform just as well as Replicanto, but it has more features that I like. The copy trader is really an important thing if you're going to trade prop. You want to have a good, reliable one, and I've always been searching for a better copier. This one seems to be pretty damn good. It's not perfect, but it's pretty damn good. Yeah, Lee, that exit shield I'm sure is helpful for a lot of people. There's a feature where it doesn't let you move your stop once it's out. You can turn it on or off. But a lot of people I think that'd be very helpful for. There you go, TC. Good work. Hey, Chris. Good morning. Just waiting for this market to develop something here. We're in a green, red back and forth here. I mean, you can see that wide range that I'm watching. Top right, 2-minute chart. I'm open to continuation, but only if we get a good sequence. Crypto, have you ever gone through a period where you are getting payouts, so doing well on funded accounts, but can't pass an eval to save your life? I think I've lost my mind. It's different, right? I mean, in the mid to longer term, let's be real, you're probably not going to trade evals. And in the beginning, by the way, you 100% should to save yourself a ton of money. But mid to long term, you're probably not going to trade evals the same way you're going to trade funded accounts. There's opportunity cost involved. If you're making enough money trading funded accounts, do you really want to spend 2 weeks in a $30 eval? Probably not, right? So it's just different. And yeah, I mean, I wouldn't worry about it too much. As long as you're doing well in the funded accounts. The difference in the eval is you're just trading bigger, and maybe catching a bad luck streak. Fear and greed index just hit. Guess what it says? Out of 100, 0 being, I guess 1 being extreme fear, and 100 being extreme greed. Don't look. Guess what it says? Yeah, Eric, you. Eric didn't guess. Eric looked. So for the market, it's sitting at 9 out of 100, which is extreme fear. Crypto is sitting at 39 out of 100, which I don't do anything with that information, but it's interesting to see. Now this little range here, this here is chop. In my opinion, you try to start scalping this little range here, you're just gonna get chopped up. There's not a lot to go off of as far as gaining an edge. I need to see either an upside test, ideally, of a descending resistance. I'm not a huge fan. I will if I'm trading aggressively in like an evaluation or something, but I'm less of a fan of buying an aggressive descending support just because now you have to time it even better because you're going counter trend. Hey Tucker, I appreciate you. C, he says, he or she, Says, I feel like we were spoiled by the excitement from the volatility of the past few days. Now it seems so slow. Please don't say that. That ATR is sitting at 70. A week and a half ago, 2 weeks ago, that ATR right now was at 11. Careful what you wish for. But yeah, yesterday was crazy. Yeah, this little range here, this is a little bit choppy, but yeah, I mean, you can see we're putting in a flat bottom. So what I'm actually going to do is let's do this. That's about the most I'm willing to draw. You can see that you can almost adjust this top just for visual purposes and turn that into that kind of wedge, right? Hey, I don't know if you said this already, but you know why Nasdaq jumped so high yesterday? Yes, Trump made the rumor real. Remember the fake headline? Here we are, by the way, getting a test of that lower potential channel resistance. That fake headline that Trump was putting a 90-day pause on tariffs. He came out and he said, confirmed, 90-day pause on tariffs for non-retaliating countries. And then he took China from 104% to 125%, just to twist the knife. Okay, here's a test of the 20 EMA and the 2, trying to push through. The descending trend line, by the way, that I have drawn here on the 2-minute chart is sitting at 18,735-ish. On this bar, at least. That's what I'm watching. Well, 30 points away here. Test to that level. See if we can hold that. And if we see a break upside through and a continuation sequence here out of the bulls, then I'm not against buying the rollover, but I first need to see how this trend line reacts. There's the test. Let's see what we get here. By the way, we are coming into that 20 EMA on the 5 just after the trend line. So far, we're seeing a respect. The 20 on the 5 is about 20 points higher than we are now. Here we are, coming in for a test to the 20 on the 5, right? All right, test of the 20 on the 5. Right here, right now. Let's see if we can get a push upside through. Now, these bull bars on the 2-minute, you take a look up top. Those bull bars are slightly shrinking. Okay, so I'm considering that as we come into the 5-minute 20 EMA. Back testing the 20 on the 2. Just remember, we have that flat bottom down around 18.6. Really like 18.590. Yes, Brian, always. I'm currently flat, but I'm always using a stop loss and a take profit. Unless, of course, if I'm taking like a longer intraday trade, then I might go naked. Manual, stopping out. But in this volatility, I think everybody should be using live orders. In a less volatile market, if you want to do things manually, fine. I will sometimes do that. But in this volatility where you can get a 250-point candle out of nowhere, live orders are important. Yeah, I don't think anyone can really afford to not run a stop in this volatility. Okay, so we're getting a nice rejection here. Now, this bar rolls over here in about 8 seconds. My thought process, if we see a close near the low, which it looks like we may, there we go, there's the rollover. If this bear bar closes in this region here, at or very near the low, I'm interested in selling that rollover. Of course, we're getting a bump upside now, but if we pull back downside, close down here, I would sell the rollover betting on the break of this flat bottom. This would be the 4th or 5th test, and flat bottoms, especially in the Nasdaq, they tend to really tempt breakout the more you test them. Obviously, that's in conjunction with a continuation setup, which I would need to see. Well, it looked like we're getting an upside retest here, at least of the 20 EMA on the 2. And coming up toward that trend line. Trend line now sitting at 710. Actually going to clean this up a little bit. This here is just getting wider and wider, so we'll pull that. Because now we're really just looking at that wedge. Big, strong bull bar. Attempting to break out here. That right there, that's the test to the 20 EMA on the 5-minute, by the way. That is being respected, but let's see if the bulls can take it higher. If we were able to break through there, then... Again, 3 consecutive, that's a continuation setup for me. However, yeah, right now, right inside of this range, high ATR... A lot of back and forth, that gets tough. All right, here's the bull attempt to take it higher through that area. 20 EMA on the 5-minute, holding it down so far. It's just relevant enough to sometimes hold things in, at least make things hesitate, right? Not good enough for me to trade off of an EMA like that, but it's there. By the way, if you guys need some accounts, Take Profit Trader has a great deal going. 30% off, no activation fee. So, you know, with Apex, the evals are cheap, especially when they're running a sale, but then you have to pay the activation fee, which is, depending on the account size, maybe $85 a month or $125 lifetime. Like a 25K account right now at Take Profit Trader is $105 if you use code BIG, and there's no activation fee. So, pretty damn good deal right now. Daily payouts, by the way. Once you get funded and you pass through your drawdown, you get that all covered, you can take payouts as often as you want. Take Profit's a cool firm. Bull's really struggling here with that 20 on the 5. There we go. There's the push upside through the 5-minute 20 EMA. Now we got to see if the bulls can hold this. Really attempting that reversal sequence up out of this descending resistance. Again, looking for consecutive back-to-back, ideally 3, but now that we've had a little bit more of a reversal, I would take 2. Back-to-back bull bars closing near the high, not shrinking. Either relatively close in size or growing. But in this volatility, I don't want to see a 120-point range bull bar. Now you're getting to the point of tempting. Well, if that were to happen, you're tempting that rubber band snap way too much. Okay, here's the back test of the 20 on the 5. Right there, there's the back test. Very common to see that. Nico, for Take Profit Trader, once you pass the eval, you can get payouts the next day. Top set makes you get 5 $200 days in a row. Yeah, so listen, they're all going to have different rules. The thing with Take Profit Trader is you have to trade for 5 days in the test. But once you pass the test, if you're able to cover your trailing drawdown or your drawdown in general, even if it's day 1 in the funded account, you can take payouts day 1. Now, you don't have to do that day 1 of being funded, but they open that for you. So if you do a 25K account, you get through the test and now you're funded. Let's say today's day 1. And let's say you make $2,500, which covers your $1,500 drawdown on day 1. You can pull that extra out day 1 and it's in your account, same day usually. And then the next day, you can take another payout if you want. It's with Apex, you have to wait 8 days, but I think it's good to mix the two firms. But if you're looking for like consistent payouts, Take Profit's a great option. That's why I like to run both. All right, Bulls taking it higher here. This bar here closes in a minute 20. Let's see how the Bulls can get this bar to close or if sellers step in. I'm really watching to see if the sellers step in and close beneath this previous bar's wick on the 2-minute chart, okay? Or if the Bulls can steer clear of that. Yeah, Bo, that's exactly right. The payouts hit very quick. The thing with Take Profit is you trade well in the test for a few days, 5 days, and then you're funded and they basically let you do. They treat you more like it's a personal account, especially once you cover that initial drawdown. You make money, you can pull it out. Bulls are struggling. You see that? They keep getting wicked back. Bears really trying to step in here. All right, so here, let's clean this up. We have some cleaning up to do. We know that this flat bottom is there. I'll leave that line. Not a big fan of leaving lines, but we will. And as far as this is concerned, I prefer to draw it a little bit less aggressive. So I'm gonna go ahead and draw this like that. Okay, don't overthink it. And then here, I'll draw this. Well, we'll just kind of place this guy wherever. Probably more like that. So, I mean, I'm watching this, but again, I'm kind of thinking if we end up seeing the Bulls take this higher and set up a continuation sequence, that's kind of top of mind. But we'll see if this ends up playing out here as well. All right, that ATR is coming down a little bit, but I'm cool with that. It's sitting at 61. Again, as long as that ATR is above like 20, 25, I'm happy. Ideally more like 25. Above 30, even better. That range starts popping up above like 80, 100. It starts getting kind of tough. Always a sweet spot. Max discount for take profit trader. The business model is different than Apex. So again, I'm not them, but I would highly doubt you're going to see anything close to what Apex runs. 30% and no activation fee is just pretty much the best deal that I've seen them run. I mean, all in for a 25K account, it's like $105, which, you know, right now with Apex 50% off, all in is going to be probably over $200 if you do the lifetime. If you end up doing the monthly, it's probably going to be closer to, well, at least $170, maybe $180. But then Apex runs 80, 90% off, and the evals are so cheap you can't help yourself, which is why I think using both is the way to go. Also, Apex lets you have 20 accounts. Take Profit lets you have 5, which is also a factor. Why do you think Take Profit only allows 5 accounts and Apex 20? That's a big difference. So all these firms are running different business models, and you have to understand that when someone comes out with a new rule, everyone else kind of waits and is like, okay, does that firm go bust or is it sustainable? So it's kind of like a race to the bottom to make it better for us, which is cool. Now, Apex lets you scale like crazy, but they have to 20 accounts, so you can get big payouts with Apex, and you can take them every 8 trading days. But you kind of have to jump through some hoops as far as their rules. Now, that doesn't make it bad. You can see I use Apex. I love Apex accounts. It's just different. So with Take Profit, I think the reason they only let you have 5 is because if they let you have 20, since you can take like instant daily payouts, you could have someone who makes a ridiculous amount of money on a huge pump in all 20 accounts and then request some massive payout that they can't necessarily like afford. And if you have a ton of people doing that all at the same time because you have a day like yesterday, that's a problem. So Take Profit only allows you to have 5. They have their reasons, I'm sure. I'm speculating. I don't know the answer, but I would assume it's to protect themselves, to make the business sustainable, which you want it to be sustainable, by the way. So that you can keep taking payouts. So ultimately, I think the way to go, for me looking around the entire industry right now, is to try to get Apex maxed out at 20 accounts, and then try to get Take Profit maxed out at 5. Then you have 25 total accounts, 20 to really drive big numbers with Apex, and 5 to take still big, but more consistent payouts with Take Profit. And then from there, you can start scaling horizontally to other firms. That's the way that I like to look at this. Because we all know scaling horizontally is how I feel this should be done, not vertically. Meaning you should keep the size per account relatively small and get as many accounts as possible. Scaling vertically would be having 5 total Apex accounts and trading huge, which I don't think is as good of an idea. All right, so we're sticking around this 20 EMA and the bottom of this trend line. See all these wicks here? This market doesn't know which way to take this. I don't like to see big range bars like we're kind of seeing in the last 10 minutes. Well, literally 15 minutes. With a lot of wicks. I prefer to see moderately sized bars with less wicky behavior. You're always going to get some wicks, but I mean, this is a mess. Gotta let this clean up a little bit. Now you can see here on the 2-minute, that 20 EMA is lining up with that trend line. Market's trying to decide which way to take this right now because we're also testing breaking downside, I should say, from the 20 on the 5-minute, which is worth considering. All right, well, this needs to work itself out. I'll be back in 2 minutes. Press like on the stream. I appreciate it. All right, we are back. Getting a little bit of setup going on here. That last 2-minute bar was wicky to the downside, so we'll see if we can get the bears giving us a good setup here. 5 seconds till the rollover of this bar here. There's the rollover. You see here, shrinking bear bars, right? Bulls trying to trigger a reversal sequence. We'll see if they can. This is one of those scenarios where probability is low, reward to risk is high. If you're a bull, that is. There we go. Bears taking it lower. Yeah, I'm still watching that flat bottom, okay? Those flat bottoms really tend to snap up, at least at some point. And guess what's below that flat bottom? A whole lot of stops. So we'll see if we can use that as a little liquidity to get in the money here. ATR's coming in. The market's a little more controlled. I gotta be honest, it's still pretty wicky here. Yeah, you see, this is just shaping up kind of ugly here. We're getting some choppy movement, and then every once in a while you get seemingly an algo move. It just wicks one way or the other and then comes right back. I know people are getting stopped on those a lot today. So I'm being very picky here. Bulls trying to take this higher, testing that 20 EMA here on the 2-minute. See here. This market's just a little rougher today. It's just not quite as smooth. Which again is fine. I like the volatility, but the last couple of days, earlier this week, like Monday, Tuesday, we had volatility and the market was a little smoother. Now after yesterday, we still have the volatility, which again, I cannot complain. The waters are just a little bit more rough, meaning we're getting a lot of wicks. Those wicks can be real dangerous. They can clip you. Still want to see if we get a test of this flat bottom though. I imagine we will. Right, there's the attempt at the break through that recent wick bottom. Coming into the flat bottom here. "40 seconds out here from the close of this 2-minute bar, you can see the bulls, like this is so consistent. The bulls are trying to hold this wick here. The close above this wick here, 2 bars ago, tells a lot different of a story than a close well below. I mean, it really does, because this right here is kind of that point of interest. Bulls are trying to hold that line. We're seeing a lot of that get held. I mean, look here, right? Obviously on this bar. All right, here comes the test of that flat bottom. We're just not getting a nice, clean continuation sequence coming into that, unfortunately. But here's the test. Look. Here's the 2-minute. This bar closes in 1:30. Attempted break. Now stops here, by the way, it's a little bit messy. You're going to get stops kind of all through this region. That's really about a 30-point region, maybe more, 40. So you get thinner. They're thinner, right? It's less of an obvious area to get you a nice, clean 10, 15-point push. It's more of kind of a slow grind to take these stops out. But we're pushing through. Few stops triggering here. Roll over here in 45. If we do get a close well below this flat bottom, a retest, by the way, very likely. Wouldn't surprise me. And then I want to see how that next bar develops. There we go, taking out more stops below this wick here. That's what that was. Last stop sitting here. Right below low of day. All right, here's the rollover. See if we get that retest. Got close. Market still wants to take those stops out. You see that big wick? That's what that was. A few of those stops getting taken out. 5-point move. Here's the retest of the flat bottom. Very common to see. You guys see that giant wick? I mean, that's why I have to wait for this to be a lot cleaner. It's just not very smooth sailing right now. It's very, it's just rough. You need a lot of algo movement, a lot of choppy wicks. Be careful out there, especially if you're trading with tight stops. Today's a day to be picky. Which, I'm not, a lot of people will come into a daily today and say, I'm just not trading today at all. I'm not that extreme, but I'm, a day like today, I do think you need to be pickier. That's coming from somebody who doesn't really think it makes sense like a lot of people do. They always just, oh, well, it's rollover week, so I'm just not going to trade this week. It's like, come on, you just don't want to work. Is it a bad idea to play GTA 5 while trading? Goodness. And if you want to, there's nothing going on. But you're going to miss more trades if you're playing video games with the charts on the side. Setups can come in a couple of minutes, even when there's nothing on the radar. I mean, you guys have seen, like, there will be nothing for me. And then all of a sudden, 3 minutes later, we're looking at a setup. So, you know, if there's really nothing in the market for you, if you want to put on music or a podcast or something, I think, honestly, fine. But you still have to pay attention, because you might miss your trade of the day because you look away for 3 minutes. Christopher, I've done that texting while trading a few times. I mean, yeah. Yeah, you look away for a couple minutes, you miss your setup of the day. Not to say you have to sit here and stare at the charts all day, but, I mean, you should pay attention. Don't forget what the primary objective is here. Alright, well, we're making a retest of that flat bottom. This volatility is rough. This here is chop. Now, I don't like the word chop anymore, because everyone overuses it to excuse themselves from taking losses. Ah, I got chopped out. It's like, no, that was a loser. And it's overused. This, though, like when you see big volatile bars with huge wicks and it just looks like algo Asia session garbage, this is what you would call chop. But it's overused. Just because you lose a trade doesn't mean you got chopped out unless you had a 2-point stop, which is ridiculous. You shouldn't be running a 2-point stop or a 5-point stop on Nasdaq, probably. If you can find a way to make the numbers work, again, I'm the first one to say, great. If you have edge, don't let me tell you what to do. But the reality is a 5-point stop, you're going to get chopped. If someone's running a 10, 20, 30, 40-point chop especially, unless you're trading in something like this, you're just taking losers. You're not really getting chopped. But this here is chopped. This is the one excuse to use that word. I mean, you look up top. You're just not seeing. I mean, look at this. All these dojis in a row, no close near the low, wick back upside. Attempt at an ugly reversal sequence from the bulls. Now, someone who's trading intraday with like a 100-point stop and looking for a maybe 50 to 200-point winner, here you go. Low probability, high reward to risk. Or I guess you would say maybe a 200 to 300-point winner. There you go. Low probability, high reward to risk. You can handle the chop because you're trading extremely wide, ideally super small size. But for the average trader who's not trading that wide, you gotta wait for something better here. Do you ever look at ES or SPY to overlay big levels it's coming onto? Like right now, SPY is getting close to the 525, 526 level, where QQQ has more room to go to get to a similar 443 level. Yeah, I think if you want to do that, absolutely. I try to keep everything clean. I have ES. I have the Qs. I have SPY pulled up behind me. But it's not like something that, I mean, it'd be very easy to pull up everything. You can pull up NVIDIA, you can pull up Apple. And now all of a sudden, you go too far with it, you have 35 charts that you have to watch all the time and you end up watching nothing. I just try to keep it clean. But to answer your question, Austin, that's not a bad thing to do if you want to make that the thing that you pay attention to. A lot of ways to make this work. However, in that regard, I feel like I get enough context for the way that I trade just watching the NQ 2-minute, 5-minute, and daily. All right, here is the test of the 20 on the 2. Bulls trying to put in a sequence here. Let's see if they can. They'd have to get above. You know, it's tough because not only would they have to clear the 20 on the 2, but once that's done, now you have to clear the 20. You're coming right into the 20 on the 5, which right now is only 40 points away. So once you clear this, really I'm left with what, a 10, 20 point scalp before we run into here. So I kind of have to wait for both of these to clear in terms of a bull sequence. ATR right now is sitting at 51, which is good. That's not bad at all. Just this action needs to clean up a little bit. All right, there we are, right into the 20 on the 2. There we go. Bulls trying to break upside through the 2-minute, 20 EMA. Next area to watch is that 20 on the 5. Really not a whole hell of a lot between now and then. But a break upside through the 5. I'm sorry, the 20 on the 5 really is above 18.7. Which again is going to be a tier 3 level. Then I'm into it for a continuation sequence. But here I got to see how this plays out. Next 30 points. Retest of the 20 on the 2-minute. Tron, Nico just got back. What's your overall trade outcome today so far? Movement is smoother, it seems, today. Not for me. I wouldn't say it's smoother for me. For my style. It's starting to smooth out a little bit now here in the last 10 minutes, but I mean, we look back at this. This has been a disaster all through here. Just nothing to take, at least with edge for me. Someone else, maybe, makes a killing through here. Most people get chopped out through here. We took one trade, and it was a glitchy mess. I had about 10 or 12 glitches hit from NinjaTrader, and there was a huge algo pop as soon as we entered. My leader got stopped, and then all the followers were managed, but I was able to flatten them. So we're sitting up a couple $100 right now. That's like 0.1R or 0.2R. So we're essentially flat, is what I would say. All right, Bear's now trying to take it lower. Gave up that 20 on the 2. We didn't really get a real test of the 20 on the 5, but I don't care what we see as long as we get a clean setup. I'm going to start cleaning up these charts down here. I'm going to delete that. Let's go ahead and get rid of this. And that. We'll just go kind of naked for now. Let's see if we can develop something new. There we go, finally getting some kind of clean movement. It's good to see. All right, this bar closes here in 1:45. That's a big bar. I don't want massive outsized bars for my entries, right? I want respectable growing bars, ideally, closing near the low. But not so outsized that you're tempting that snapback too much, which is a discretionary decision for me. But here we are coming into this recent low. This is looking to me less like a flat bottom, more like a potential descending channel. Bo, is volume dying off a concern? I'm not really concerned with volume. I'm more concerned with just range. If range dies off, usually that'll come with a volume die off. But if we see like an 8-point range, for me, it's time to walk away. Range right now, though, is above 40 points, which is good. Well, some buyers stepping in here, trying to take this a little bit higher, wicking it back upside. Not a fan of that. All right, here's the rollover. Now that would be an entry for me if the bar wasn't so outsized. Obviously, we have some nice stops. It's tempting, but I know it would be a slight rule break if I were to take that. You have some stops below here, of course, which is good, but, you know, this bar, compared to these, I mean, you know, seeing some wiki movement here. All right, so just took out those stops below that previous low. Right, those buyers still stepping in. They're failing as far as the big picture right now. 20 seconds out from the close of this bar. Big wick back upside. Big wick back upside, no entry for me. Close. That all changed in the last 5 seconds. Gotta be picky here today. All right, 37 seconds out from the close of this 2 minute. There's the rollover inside of the previous wick. Shrinking. Weakening. Bulls trying to trigger some kind of reversion sequence. See if they can. I'm not totally convinced yet. All right, 12 seconds out from the rollover of this bar. See if we can get a nice low close here. All right, sitting short on that rollover. Stop up toward 18,565.75. Take profit down at 18,485 and 3/4. See if we can get some kind of continuation sequence going down. That right there is just about the best entry I could have gotten, at least so far today. See if the trade works out. Couple points in the money. $10 points in the money. $25 points in the money. 25. There's a push. And there we are. Out fully there for a winner. Let me flatten. And there we are. Flat for a winner there. Okay, so here's where we sit now. See, are we flat? All right, there's where we sit now. That leader account, by the way, remember the first trade? The weird one, we got like instantly stopped with the glitch. So that was actually sitting more red than it is now. But total bottom right, you can see that's where we currently sit. That right there was the cleanest entry we could have gotten all day. So let's see if we can grab something else. Bo, all done for the day, gentlemen. Plus 2R, off to golf. Enjoy the day. Have fun. Mark, that's Affordable Indicators. It's just their copier. Which I don't have a code or anything for. I just like it. But I do have a code for Take Profit Trader. Big. B-I-G. 30% off, no activation fee. So a lot of you guys caught a similar trade. Cool. Good work. That was a clean setup. I mean, you look at this move here. This was just all full of choppy hell. This, look at how much cleaner that got, right? A lot cleaner. Tron, I missed that trade. I was eating a sandwich. Gotta eat lunch. So I'm not necessarily done, of course. I just got to see if we can get something else. I mean, we're down 4% now here on the day. But I got to tell you guys, the price action here in the last 25 minutes is so much cleaner than it was. I mean, this was just so ugly. I mean, I can't. There's just nothing I can even take in there. This, though, much better. Much, much better. This was our entry. This roll over here. Very clean entry. By the way, regardless of how that... it was a winner, but regardless of how that trade would have played out, that was a great, beautiful entry. All right, Bull's trying to trigger some kind of reversal sequence here. Let's see if they can. This may very well turn into a big descending channel. And if it does, fine, but... see what this turns into here. That'd be an aggressive descending channel. We'll see if it does turn into that. DNA done for the day, headed to the beach. Good, have fun, have a good day. Enjoy the weather. When the volatility, this is a good question. When the volatility is so extreme, isn't it the case that time-based bars have huge wicks, and thus it's hard to get in as a continuation trader? By time-based, I assume you mean as opposed to tick charts. Or do you mean on like whole hour rollovers and bottom of the hour rollovers? Yes, like a 9 a.m. bar, a 10 a.m. bar are gonna have bigger algo wicks, but I assume you mean based on like charts, like a 2-minute chart compared to a tick chart. I prefer time-based charts. Yeah, listen, it's just a different way to look at the data. If you prefer tick charts, by all means, please trade tick charts. I just prefer time charts, that's it. At least right now, and that's, you know, that can always change. You have to adapt. Maybe someday I'm trading tick charts, who knows, but right now I prefer time. Just kind of what I've always used. Zachary, okay, I've managed to get edge and consistency. I just have to pass the evals. I'm about 30% there with a handful of accounts. It only takes 4 or 5 trades per week to make a ton of money. Yeah, listen, if you have an edge, just exploit it. That's it. Doug locked up 509 times 2 for second day funded. Cool, good work. All right, still watching this downside move. Again, I'm very interested. If you look at this 2-minute chart, the 5 actually tells it, I mean, maybe even cleaner. Do we end up seeing a very aggressive descending channel? Which would mean that bulls are looking right about in this region for a bit of a bounce. Let's see if they can hold that. What do you expect day will end, in red or green? Well, right now we're down 4.2%, and Trump could come out and say anything that could do anything. So I don't care if it ends red or green today. I'll just trade what the market throws at me. Listen, unless without just being a civilian, like someone who doesn't have power to move the market or doesn't have inside information, anybody who's like looking at today in the environment we're currently in, where one tariff statement can literally flip us to 5% green right now. Anyone who's like, yeah, I think we're going to end 2% in the green. Based on what? Just let the market do what it does, let the news hit, and trade what it throws at you. That's all we can do. Yeah, I mean, you look, we're down, what, 820 points? I mean, a few days ago, we saw an 1,100 point move in less than 10 minutes, so news can change everything right now. It's crazy. Still watching to see if on this 2-minute chart, this bottom here, which would be right about now, if it gets respected. Otherwise, if we see a breakdown side through and this descending channel idea goes out the window, then it's time to continue to look for continuation. Steam, been withdrawing daily from the personal account. Good for psychology to lock in profits. Yeah, 100%. 100%. Like with Apex, you have to wait 8 trading days. But, you know, personal account, obviously, it's up to you. Take Profit Trader is beautiful. You can take daily payouts as if it's a personal. You still have the rule, obviously, like drawdown. But it acts a lot more like a personal once you get above that buffer. All right, bulls trying to see if they can kind of reclaim a single bar here. They're not doing so hot right now. There's a continued push. The range on this bar right now is going to be about 60, a little over 60 points. Which is starting to get a little bit large. At least contextually so, right? Yeah, there's a wick back upside. Okay, we'll let that be. See here, here's kind of what I'm looking at. Now this bar here, up until the last, like I'd say 10 or 15 seconds, it looked like we were going to see a close at the low. Buyers step in. You get, what is that, a 10-point wick back upside, 11-point wick back upside? So it's not, you know, uncommon. You see the most recent data, last 5, 10, 15 seconds, buyers winning. Obviously, sellers won the bar, buyers won the last 10 seconds. You step in, you get this push, which obviously is why I avoid these big wick backs. Not big, right, 10, 11 points, but these last second wick backs. Because what does that tell us going into the next bar? Well, buyers are currently winning on a second-to-second basis, right? I don't like to bet against that. I'm just looking for the best setup I can find. The setup we took was fantastic. But looking for more here. All right, Bulls trying to finally locking up a bull bar here after about a half hour. Bulls trying to trigger a sequence here. Let's see if they can. All right, while the Bulls try to take this higher, I'll be back in 2 minutes. All right, we are back. And not much has changed except for the bulls failing to take it higher. I took a peek while I was out there. Saw that they were succeeding for a couple seconds, and now bears are fading it. Okay, Jabri, I see your name in chat every day, and I need to know how to say it. So if you could tell me how to say it, I'd appreciate it. But what about 16 trading days, 132 trades scalping, plus 7.5% and 92.42% win rate? Any risk for it to be luck still? Well, yes, but the risk goes down the bigger the sample size. Here's how to know. Here's how to make a better estimation based on the data you have. Go to a website. I have no affiliation. I have no idea who programmed it. It's just some good Samaritan out there looking out for everybody. Type it on Google, coda.io, equity curve calculator. Click it. It runs a bunch of like 300 trade sample sizes, and I think it runs 12 simulations. You input your data, you run the simulations, and you look for any hidden risks that you haven't thought about in the simulations. Now, it's not real life data. It's not going to be as good, but it's better than what you're currently dealing with. You guys see what I'm looking at, right? Flat bottom. See if we can get this flat bottom to break. Bulls holding on to it with everything they've got. All right, here we go. Testing the flat bottom a little bit. These bulls are really not giving in, are they? Trying to hold that flat bottom. Now, for context, probability here of never breaking that flat bottom and seeing just a huge bounce from here, probability of that is very low. But reward to risk on it is huge. Doesn't necessarily mean there's edge there, but if that's the way you trade, here's one of those scenarios. Probabilities are, right now, and again, this is probabilities, this is not certainties, that we at least see a test of breaking that flat bottom. That's the probabilities right now. You guys would please press like on the stream, helps out a lot. Appreciate it. All right, here we go. Another test of this flat bottom. Can the bears take it down and through? There's the test. Tempted to break. There we go. There's some stops triggering. There you go. There's the break of the flat bottom. come on. What did we just talk about? Is there anyone else to watch here? No, that's just based on probabilities. Those flat bottoms are just too tempting. The market, most of the time, most, meaning over 50, can't help itself. It has to see a test. It's just so obvious. Looking, I mean. And everyone wants to see a test. So the last 10 minutes have been a bit more wicky than previously, but still a lot cleaner than we saw earlier this morning. So let's see what we get. Chris, Nico, I got a question. Sometimes you like to trade with the idea of trading into the direction of triggering stops. What kind of scenario are you looking for in those situations? Ultimately, I'm looking for an obvious stop hunting region with a, and here, look at this. Here's the retest of that flat bottom. Happens almost every time. Okay, so stop hunting. Ultimately, I'm looking for, here, let me show you this. See, this is like intraday low. Now, had we, remember this bar was a little outsized, so I passed on it. But had we seen a more consistently sized, slightly growing bar that closed like right ahead of that level and then rolled over at the low of the bar, and it wasn't too outsized, right? Discretionary. I sell the rollover betting not only on the continuation setup, which I would take anyway, but also that we see some stops in this region, because this was low a day at the time, triggering and pushing me at least 5, sometimes 10, less often 15 points in the money very quickly. It gets momentum going in my favor very quickly. So it's two things lining up at once. It's the stop hunting mentality and the continuation setup aligning. That, Chris, that would be what I would be looking for. That alignment of the stars. It just creates this beautiful stop hunting plus continuation setup. It happens both directions, by the way. And that to me is one of my favorite setups. Now, of course, you're risking putting in a flat bottom bounce. But over time, it's my opinion that that setup, at least the way that I trade it, has edge. It's not really an opinion. It's based on data, right? All right, Bear's trying to take this thing even lower. So we got the retest of the flat bottom, right? Bear's trying to fade that now. There you go, there's another downside break here. This bar closes in 1:45. Let's see what we get. Again, hey, heads up, by the way, right? Look at the daily. Remember, it's a big range, okay? But 18.3 is this flat top that we saw. So we're about 80 points away, 60 to 120, let's say, from that range as a whole. When would you move stops to break even? I'm finding myself moving them too early. For me, let's say I'm trading prop. I would move to break even if I'm trading a static account and I'm taking more longer duration intraday trades with bigger stops, bigger targets, and smaller size. Or if I'm scaling in, okay, for example, a strategy that can work well on a static account with no trailing drawdown. The drawdown is static with prop. a strategy that can work very well but has a low win rate. Putting on high probability trades and then trying to scale in while you're in the green and keeping your stop at break even, because then you take small losers often, you take a lot of break even stops, and then every once in a while you catch a big, sizable winner. That can work well, but it will not work well most likely with a trailing drawdown because you're going in the green and then pulling back to break even way too often. Okay, here's the 2-minute chart. Need this bar to grow a little bit to give me an entry. It's not, is it? Now we're wicking back a little bit, staying small. That's a shrinking bear bar. No entry, unfortunately, here for me. Kings, personal, never tried prop. Yeah, so personal account is going to act more like a... That's kind of like a static account, right? So with personal, obviously no trailing drawdowns. So that's something you could think about trying. But you have to be prepared to take a lot of losers. Okay, because it's not the probability of getting a big reward to risk and being able to scale in, keep your stop at break even and scale in big, like many contracts. The probability of that working is going to be low. So what that ends up being is a really high reward to risk, low win rate strategy, which you can make money on if the data looks good. Lee, been working on a ninja script that dynamically adjusts your ATM based on the ATR. Still more testing, but so far so good. Yeah, that's a very... Adjusting your stop and really your brackets based on the range is very common. It can be done manually, but I mean, yeah, that'd be great to have it automated. Obviously, whatever we can automate reliably, the better. All right, watching here. 35 seconds out from a close of this bar. $25 seconds out from the rollover. Range here is about 65 points right now. Keep in mind, we're about 30 points out from, well, it's more of a range, okay? So we're coming into that flat top we saw on the daily chart. Wicking a little back upside here, getting stuck around the 30s. I'm gonna hold it. Coming into that flat top, again, I gotta be picky on a daily today. Coming into this flat top here, look here. This is gonna be a range, okay? Because it was a little sloppy, so we're kind of in that range already. That range goes all the way from 18,170 up to about, I mean, let's be honest, it's about a 200-point range, 18,360. So I would expect some buyers, by the way, to start stepping in as we're in that range a little bit. That doesn't mean it's going to bounce necessarily. It's all a balancing act, right? You can see a little bit of a wick and then buyers trying to step in. Do you give any weight to trend lines on the 5-minute? Yeah, so the trend lines on the 5 and the 2 are going to pretty much be the same in most cases. So yeah, but I draw them on the 2. So there you are, getting those buyers step in. I would imagine now as we get into that region, okay, on the daily chart, that flat top that we just talked about, I would imagine we'll start locking up a few more than previous bull bars. Again, that doesn't mean it's going to reverse necessarily, but buyers are going to start having a little bit more confidence to put their toe in the water coming into this flat. Bottom of your screen there, you see that? Coming into that flat top range, you're going to see buyers have a little bit more confidence. And sellers maybe step out a little bit. Kings, W on my trade, I shorted, and for the first time in a long time, I didn't close early and actually let it hit my take profit to get out of the trade. I was sweating, but I'm glad I held to the end. That's very much so progress. Stick to the plan. If your plan, by the way, let's say you run a 40-point stop and you automate a 40-point take profit with the understanding that at the end of the day, you might average 30-point take profits because you let some go to 40 and you take some off at 20. Negative reward to risk. If that's your plan, by the way, that's okay. However, for most people, especially in the early years, just automate it and make sure your entries cover your bases. So what I mean by that is you should be thinking about your stop, thinking about your take profit when you enter, making sure there's going to be no issues. Obviously, you can't, predict if it's going to be a winner 100%, but make sure you're not, putting out a 40-point take profit and, oh God, there's a 20 EMA on the 5-minute, 5 points away, and now you're already in. And you're like, well, I better take it at 5 points. You want to think about these things ahead of time. And then once you get in, just stick to the plan. Just let the orders sit. That's a more robotic strategy, but over time, you will become more dynamic. But being robotic in the early days, I think is a quicker way to get there. And then you can start making little tweaks along the way as you move closer to the middle of the spectrum, which is becoming a little bit more dynamic with robotic mixed in. Yes, we are down 4.88%. It's crazy. All right, here we go, getting a bit of a fade. We're now down over 5%. Now, by the way, given we've had this scenario quite a few times, don't take my word for it. However, it seems to me that take profit, unless we hear otherwise, is fine. Obviously, circuit breakers make a bit of a difference. That's 7%, but 5%, is not something we see often. So the rules get a little bit hazy when we start seeing that. I've heard nothing from take profit, so I don't believe that they have an issue with trading these accounts below 5%. Now, when we hit a circuit breaker, I would think otherwise. But seems to me that we're safe here on take profit. Apex as well is safe. I know that other firms have rules. If the market's down 5% plus, they don't want you trading the accounts. That would be a rule break, so make sure you understand with what prop you're trading. Again, keep in mind here, we're still in that range. This is a 200-point wide range about this flat top that we saw on the daily chart. This region here. Again, I believe you're going to see some buyers with a little bit more confidence in this region. Maybe a few sellers hesitating a little bit more. It doesn't mean we're not going to fall right through it. Just as far as price action balance is concerned, I'd be thinking about that. Yeah, Quicksilver, what's up? You catch this whole move or what? Or here we are into the 280s. Dead wrong. If you're getting that error trying to log in, I'm not getting that on my end here today. Maybe try a different device or a different browser or something. Haven't seen that. Ben, paid for a year of rent today. Good work. Get out of here and enjoy your day. Guys, listen, reminder, Take Profit Trader allows you to take daily payouts, 30% off, no activation fee. In a lot of cases, makes it cheaper than Apex. Okay, so now you have to spend 5 days in the test, which really, in my experience, is no big deal. But you can be in a 25K account for all in, 105 bucks. Make sure you use code BIG to get the no activation fee and 30% off. All right, guys, you know what I'm looking for. I'm watching for continuation here. That's going to be it for today's stream. Tomorrow morning, make sure you subscribe to the channel. Every single day, 8:15 a.m. Central Time. I'm live. All right, guys, have a good rest of the day. I'll see you in the morning.